Say again?
Mic check.
I'm going to present
Check.
slides for that retirement stuff.
And I'm gonna go tell the parents they have to go to 124, they're on the other side.
Check. Is that better? That's been better.
To the staff
This is
meeting,
financial, ¿quién iba a
and then he started working with me.
Es que para financial literacy. Financial, okay, yeah, this is for you.
All right, so we're gonna go ahead and get started here. So let me sort of explain a little bit how we'll be doing things in this session. We're supposed to have two speakers. The other speaker from Bank of America called in late, called in that she was sick and she was not going to be able to make it. She was supposed to try to send me something, but I've been checking my email and I haven't received anything as of yet. So we're going to start off with Mr. Cunningham here in a second. After he's finished, there's going to be 3 tables set up. If anybody wants to talk to him individually, all right, he will be set up at a table over here in this corner. All right, back in the back corner, we have Miss Miss Cooper, who used to be an investor with T. Rowe Price. All right, so you can go over and talk to her and try to get some information from her. All right, and then I will be sort of right here, this table back here behind the wall, and I'll talk to you about ways that you can make college cheaper. All right, Ms. Harvell is not able to come. She was supposed to come, but because of the weather and the traffic, she's not going to be able to make it. She was going to talk about the trade school. So some of the stuff that I will sit down at the table and talk to you about also goes for trade schools. All right, so then we'll move on from there. So looks like we have a few more people coming in, and then as soon as they get settled, Mr. Cunningham will go ahead and begin.
I got it.
Yeah, we got it.
Yeah, I talked to the IT guy, he gave me the heads up.
Yes. Yes.
All right, so good evening.
Good evening.
My name's Trent, as Hugo just said. This right here, like I'm going to talk about some things tonight. If any of it interests you, you want to talk deeper about it, you can either see me at the table or you can scan this QR code and make an appointment. I do all my appointments usually on Zoom. That way, you know, you have privacy. You're not talking about your finances and your personal stuff in a group of people. We can meet one-on-one. And I can also meet in person, but usually the first meeting's on Zoom. I've been working with teachers, public school staff for probably over 10 years. I'm a financial advisor, but I am approved with PG County to do 403B. So for the parents that don't know what 403Bs are, it's like a 401k, but it's for teachers and public school staff. So it's basically a different IRS code. So I do 403Bs for the school system, but I also help with retirement. So when I sit and talk to people, you know, we look at what's called your retirement circle. And I guess you could say there's 4 key elements to a retirement. You know, you have your guaranteed money, like your Social Security. Hopefully it'll still be there for all of us when we get older. Your pension, which if you're working with the state, you hopefully will get a pension if you get vested. You know, usually when you're working with the state, you got to work a certain number of years to be guaranteed money from the state. It says annuities because people can invest into a 403B or a 401k or an IRA, and they can annuitize it and get their own self-funded pension. So what that means is between Social Security, pension, and a lifetime income annuity, you could hopefully retire and make the same that you're making while you're working. Because generally, I don't know if you guys know this stuff, but Social Security gives you about 20% of your income. Pensions normally around 35 or 40. So if you're lucky, you're getting like 60%. That's if you have a pension and Social Security. With the annuity, that's what the voluntary plans are for, to fill that gap. When you retire, there's a gap, and that's why they offer 403Bs, 401Ks. If you don't have those things, then you can do an IRA. That's how I kind of got into the other one. So these 2 quadrants are different retirement accounts you can invest into. The red area is pre-tax accounts, basically meaning you're deferring taxes. Which means when you retire, every time you take money out, the IRS is going to have their hand out and say, pay us our taxes. So you're basically in partnership with the government. If the taxes go up, when you retire, you're gonna have to paying more in taxes. And taxes, you know, if you look at a price of a McDonald's value meal when we were younger, or when I was younger, what was it, like $2? Now it's like $15. So that's how a taxable retirement plan works. You defer taxes. Now, a tax-free retirement plan, you're paying the taxes now, you're getting out of the way, so in retirement, it's all liquid. You don't have to worry about paying taxes every time you take the money out because you already did it on the front end. And then the last puzzle piece, the life insurance with living benefits. I don't know if you noticed, but I drink a lot of water. I was diagnosed with cancer about 6 years ago. I had life insurance with living benefits. It was basically a 30-year term policy. It was a $300,000 policy. And because of the severity of my throat cancer, my life insurance death benefit gave me what's called an accelerated benefit. So basically gave me $100,000 of that 300 that I lived on while I went through my chemo, my radiation, my surgeries, and I was down to like, I know you don't believe it, but I was down to like 150 when it was all said and done. But that protects your other plans from being liquidated. Something like cancer, heart attack, stroke, you wouldn't have to drain those accounts to pay your bills if you couldn't work. You could use the life insurance with living benefits. Now, keep in mind, it's not like Aflac where you break a fingernail or a foot or, you know, it has to be something serious. Bad car accident, you're in a coma, can't perform 2 out of 6 daily living activities, cancer, heart attack, stroke, stuff like that. And what's important to understand is basically all 4 of these work together to give you the retirement you want and deserve. And if you have questions in any of these areas, like I said, I'm more than happy to talk to you about these things and help you understand how it all works. Because with me being I'm a financial advisor, I do everything. So I'm not trying to push anything. I'm just trying to help you understand and you figure out what's best for you and your retirement. Hopefully you decide to work with me. If not, you know, that's what I get, the satisfaction I get out of talking to teachers is some of them don't work with me, you know, but they at least know that their pension isn't going to be as much as they think it's going to be, and they know that they need to start saving into the 403B so they can one day retire comfortably. All right, so I don't know. This is basically just a simple chart that showing you the 8 different places you can invest your money, and it all depends on your risk tolerance. So some people are conservative, they don't want to lose money, so they're more on like around the fixed index annuity side, where you can make a decent amount of return, but you can't lose money. Some people, you know, they want to risk it, and then some people like to diversify, where, you know, there's this thing called the rule of 100. So if you're 50 years old, you should have 50% of that money secured, and then 50% you can invest in the market if you want. So that's a general rule of thumb. Take your age, minus that from 100, and that's the amount of money that should be protected from market loss over on this side. Some people prefer everything on this side, but if you want, you can invest some of it, because it's kind of like being in a casino and you're up money playing craps. You know, you want to take some of that money off the table. You're willing to lose back a little bit, but you don't want to lose it all back. And that's basically how investing in the parts that have the red, that money's at risk, you can make a good return, but you can also lose a lot. And like I said, it's good to be diversified. Like, get money that is protected from market loss. That's like your nest egg for retirement. And if you want to risk the rest, then you know you're more than welcome to. You're welcome to risk it all, but that's just the stuff that I will talk to you about. And then this is the last slide. Hopefully I've kept you on the edge of your seat for all of this. So these are the things that you're trying to protect against in retirement. So when you get ready to retire, you have to have an exit plan. You have to have a way of what are you going to do with your money? Like you put in a 401k, you put it into an IRA, you put it into 403B. Is it protected from market loss? Is it guaranteed to be there for you as you get older? Because the worst thing you want to do is there's a market downturn, like 2008 when the housing market, banking crisis happened. A lot of people lost so much money they had to go back to work. So you have to have an exit strategy. How are you going to protect your money and live on it for the rest of your life? So, I don't know, God forbid you don't have to go back to work. So I'm sure once you retire, you'd rather be on the beach drinking Mai Tais rather than coming back to work. So you want to protect from market fluctuations. You want to have your money secured so that you know it's there for you. Portfolio drawdown, back when, I guess, back in 60s, 70s, the people would say, you know, just take 3 or 4% from your portfolio a year, and that should be enough to last your whole life. Well, that's long been debunked, and you don't want to base your whole retirement on it should be enough to live on. You know, you want a guaranteed amount that you can count on for the rest of your life. You know, longevity is a concern as far as having enough to retire that's going to last you. When people are living longer, inflation, you might want to look at something that goes up with inflation, like your pension and Social Security. It has what's called COLA, a cost of living adjustment. Every year it goes up, and it's supposed to keep up with inflation. There is retirement plans that adjust every year to keep up with inflation as well. This is a side effect of throat cancer. My mouth gets dry a lot. So anyway, taxes. That's what I was talking about. If you have a pre-tax plan, and you're getting older, taxes are going to go up. You want to avoid having to pay more in taxes by paying some of the taxes now by setting up an after-tax account for retirement. And then healthcare costs. Like healthcare can eat up a retirement plan faster than anything else. And there is a way to, remember I was talking about in the beginning where you could take your retirement plan and set up your own self-funded pension? Well, those plans also have a doubler. So let's say you put $200,000 in a lifetime income product, and it's giving you $20,000 for the rest of your life. Well, if you got sick and had to go to a nursing home, get long-term care, it doubles. So it goes to $40,000 for a period of 5 years, because that's basically the average of, unfortunately, if you go into long-term care, most people don't make it 5 years. But if you do, it just reverts back to the $220,000, and you get that for the rest of your life. So that's something to consider is long-term care, like health care costs when you get older. Because I'm sure some of you have had parents that you had to take care of and move them in with you or something because you weren't able to send them to the nursing home. So that's pretty much it. I think Hugo's put me over there in the corner. Like once again, here's my QR code. I didn't bring cards because Hugo told me he printed out a bunch of these.
I did, they're right over there.
Okay. So I shouldn't have, I threw them on a bus and it backfired on me. Anyway, you can either scan that or get one of the printouts, or hopefully this has helped and been informative, and I appreciate all your time.
All right. Mr. Cunningham. Our other guest that's here that used to work with T. Rowe Price, she's going to come up and just tell you a little bit about what she's going to talk about. Then I'll tell you a little bit about some of the things that I'll talk to you about, and then you'll rotate to the 3 tables and get the information individually that you want. All right, so Ms. Cooper.
Hello, everyone. Thanks for coming out. I really don't have anything prepared. Hugo just asked me to come down and speak to you all. I'm not a public speaker, so take a sip of water and breathe. I worked at T. Rowe Price in Baltimore for 27 years. I started there when I was out of college and ended up leaving there in 2020. And I just want to talk to the young people about the importance of the time that you have and how your money can compound over the years. Young people, you have time on your side. And I know you think you're young and you're always going to be young, but you're not. You're going to get older, and you want to have some money saved and invested. I can give you a good example of how time can be on your side. I invested in an IRA in 1999 or 2000, something like that. And I only put like $3,000 in 99, and then another $3,000 in 2,000, another 3,000 in, to the point where I had $12,600 in my IRA. And then I went to an accountant to do my taxes in like 2002 or something. And he recommended that instead of investing into an IRA, I invest in a Roth IRA, where I pay taxes now, but the money grows tax-free through the future. So I remember, put in $12,600 in the early 2000s. And I pull up my account right now, because I took his advice, stopped investing in the IRA and started investing in the Roth. But I just left that 12,000 sit there. I pretended it didn't exist. And when I pull up my account today, I have $157,196.72 in that.
That's all tax-free, right?
No, because that was the IRA that I invested in, where I had invested in the IRA first with $12,600 and just left it there. And then he told me start investing in a Roth. And so then I started investing in a Roth. But I'm saying that $12,600 that I put in is now $157,000 just sitting there. And I haven't paid taxes on that yet because that's the traditional IRA. But I started investing in the Roth. And there's minimums or maximums every year that you can contribute. And I don't know how much I contributed, but in my Roth, I have a lot. I won't say the number, but I could buy a house. I'll just say that. And that money I've already paid taxes on. And so I'm 56 now, and I stopped working at T. Rowe Price in 2020, and due to some circumstances, COVID and some other things that were going on at the time. And I do work seasonally at Oriole Park, at Camden Yards, and Ravens Stadium. And I do that more so to just stay busy and stay, active. And but because I worked at T. Rowe Price, from the time I started there, I invested in what the gentleman discussed about the 401k. I made my contributions to my 401k. At least, you should always make your contributions at least anything that the company is going to match. You should always do that. So I always did that. And over time, I just paid myself first because the money came out of my pay into my 401k. It just came out of my pay before I even got a hold of it. So I just left it there. I invested in the mutual funds, and now I have also money in my 401k. And I'll tell you that I could buy 10 houses with the amount that I have in my 401k. I've always been kind of like an extreme saver, I guess, even as a young child. Like, I always like to count my money more than I like to spend my money. But just know that if you just stay disciplined and like consistent, and it doesn't have to be, $200 a pay or whatever. It can be a small amount, but the important thing is to just be consistent with it. And I'm not like a hair girl and a nail girl, and I have to have the fanciest purse and all that stuff. Like, I don't care about that. Like, I know that I'm secure financially. Like, if I don't want to work another day, I don't have to. If I want to go on vacation, I can. If I want to buy a car, I can. Like, it feels really good to be comfortable and financially secure. And just be consistent, be disciplined. Time is on your side. And anybody, even the older people who are here, like, if you just start wherever you are, and invest and talk to people and read, instead of spending time on Instagram or whatever, looking up what Diddy's doing or Cardi B or Megan Thee Stallion's breakup with whatever, like, read about finances, and it's important. And I'm telling you, time will go fast. Like, it will really go fast. So, that's good. Sorry, sometimes I can like ramble on, but I'll be in the back with some information from T. Rowe Price. You can scan the QR code and get some information about investing there or anywhere. It doesn't have to be there. And I have some little giveaways and stuff. And if you have any questions, you can feel free to ask.
Thank you, Mr. Cunningham and Ms. Cooper. I just want to tell you a little bit about what we do here in school for the students. So as one of the 4 financial literacy teachers that we have here, we go over with the students how they can be in this position to do things like that if they start saving and investing at a younger age. And so every teacher has their own way that they teach. I've been blessed to get a grant from Dave Ramsey. Some of you may know he is somewhat of a conservative financial person who has a special program designed for high school and middle school students. And so the county has another program that we run that goes through NGPF and some other financial circuits. But I wrote in and asked if we could get a grant from Ramsey, and they gave us a grant for 1 year. And then at the end of the first year, which was last summer, they said, hey, we will give you a grant through January. Someone has decided that they want to help out High Point High School. And so as January came and I had a new group of financial literacy students coming in, I thought that we were going to be finished with it. And then they sent me an email and said, we have someone else that's decided to bless you all for the rest of this school year. So I use the Dave Ramsey program, but the main thing that you're hearing, that your students are hearing from that, is what these 2 speakers that are here today are going to talk to you about. All right, they're going to talk to you about how you can invest. They're going to talk to you about how, if you start investing at a young age, you'll bring more money in. What we also talk about in financial literacy is the importance of setting up a bank account, starting a savings account. You can also look at credit unions. If one of you all, as parents, are a member of a credit union, all of your children can also join. All right. The big one around here is Navy Federal, that a lot of people, if they are part of that one, that's one of the more successful credit unions. But there are several other credit unions. I worked for the state for many years, and so I was a part of CQ, or the State Employees Credit Union for Maryland. So we go over how you do that. So the other guest that was supposed to be here today that was sick was coming from Bank of America. But we have several other banks that are out there. And so we talk to the students and we tell them, you have your big banks like Bank of America, Wells Fargo, and I don't know, it used to be Nationwide. Those are fine, but when you use those banks, some of them have more fees depending on where you are in terms of your investments with them. So look at your local banks, a bank like Fulton Bank or another small local bank that might be in the area here. Because sometimes they'll work with you and they don't have the same type of fees. Then we talk about, okay, once you get a job, you're gonna start saving money, and then we advise them, hey, if you can, put a little bit of money aside to invest. And if you start now, if you put $100 in a high-interest savings account, and you start at 16 when you first get your job, 30 years from now, you can be a millionaire, all right? Do the math. If they put it in an investment where they're getting 4% interest or more, so a high-yielding savings account, which they can get online, all right? When they're 46 years old, they'll be a millionaire, as long as they don't take it out. So we talked to them about that, so I want you all to reiterate the same thing. Hey, get a job. I know some parents don't want their kids to work when they're 16 and 17 because they want them to concentrate on their education, but let me tell you, okay, those students who work become more serious after the first 6 months. They become more serious, and you know, some of the kids that want to go have fun all the time and you know, not come to class on time or not come to class at all, they lose that behavior because they realize if I do that at my job, I'm going to lose my job. And once they start getting the taste of a little income coming in, they don't want to stop. So, you know, that's one of the things that I preach as a teacher. Hey, when you turn 16, try to go out here and get a job. And, you know, I don't know about you all, but when I was 16, we came nowhere close to making $15 an hour. But that's the minimum wage in the state of Maryland. And if you go right next door to Montgomery County, I believe it's a little higher than that. So if you're okay with it, even if it's on the weekends, encourage your students to go get some income. And then the other thing that I want to talk to you about, if you come to the table, is ways that you can save money going to college. And some of these work with trade schools also, so even though Ms. Harbell's not here to do that part, if we start looking at what we can do. So you may not be aware of this, but every student that graduates from Prince George's County schools can go to Prince George's Community College for free for their first 2 years, okay? For free, all right? So even if that's not their ultimate choice, you want to go to Harvard, and Harvard doesn't give you a financial package, go to Prince George's Community College and try to see if you can transfer to Harvard. If not, we have a bunch of other schools here in the state of Maryland that you can transfer to. Those students who want to go out of state, there's a way you can do that. So I'll talk to you about that if you come over to my table in the back. I'll tell you how you can do that and save a little bit of money. And so we're just here to help you all earn money and save money tonight. And so any questions you have after you leave, feel free to contact me. If you get their information, I'm sure they'll be glad to talk with you also. All right, so give everybody a minute. There's some more food over there, more drink if you want to get one, and then go over to Mr. Cunningham's table. All right, go over to Ms. Cooper's table, and I'll be right where those young ladies are over there. All right, I'll be at that table over there. So come see us. All right. Woo. Another thing that he will talk to you about is they have fixed index things that you can do now that work sort of like insurance, which will provide insurance for your family, but also for you when you decide you want to retire, parents.
Hello, sir. Good afternoon.
What's up, Sharon? Oh, no, good to see you.
I'm their mom.
Oh, good to see you, Miss Peters?
No, Miss Carol.
Miss Carol? Oh, they're Peters, you're Miss Carol. Okay, gotcha. All right, thanks. All right, so thanks for helping out.
You're a teacher here. My name is Vera.
Vera?
Yes.
Oh, good to see you, Miss Vera. Miss Sheriff Basic. I do really things around here.
My son name is Nathan, not John.
$20,000 a year.
I don't think I have all my classes. I'll keep an eye out. Wait, is Nathan here?
No.
I'll keep an eye out for it.
My older brother came here and he graduated 2018, and my middle brother started here 98, and then he sat for the exam and went to Roosevelt, and she's going to graduate.
Exam for which program?
I don't remember, some kind of thing that they teach them when they are in middle school when they come here.
Maybe tag, talent tag,
Yes.
or something like that. Right on.
So now
Nathan wants to get into talent get the inside tech stuff. We do a bunch of that. Like you see me. I'm trying to live stream to the YouTube channel, but internet's not a great right now. Yeah. But if you go to that QR code, it'll take the YouTube channel. We have a bunch of stuff related to the science and tech program.
I didn't have signal either here too. I have to go outside.
Oh, oops. I understand. Well, no worries. I'm recording it right now, and then if you go to the channel, you should be able to watch the VOD. Same thing with the other programs we're doing, like the entrepreneurship event we helped out with at Bowie State University, or the esports competition we went to University of Mary Washington to help with. One of our kids won that one, so hopefully they'll get him a scholarship. Yeah, he understood that. Yeah. Now the football team here is. Oh yeah. So if you scan the QR code, it'll take
Yeah,
you there.
but the internet is bad, Kevin.
Also true. Well, you might be able to open the link at least. Anything?
No.
Nope. It's still.
It's still.
Yeah, it is taking its sweet time. But hang on, let me see if I can pop it up for you.
You have like a card when I go my
A card? Nah, I never made
I
cards.
have to do
Oh, you can take a picture of the QR code. That's also an option. Yep, so you got the QR code, you got the YouTube channel up here. It'll load on the computer faster.
And like I said, it's not bad to diversify. I mean, you're still young. So doing something like.
Alright, good job. Alright, thanks. Let me get the. Alright, thanks, Spirit. Let me get the last of this. Oh, my dad's from one artist.
You started before you got the job. You started now.
Alright, super. Sounds like a plan. Thanks, we'll work on it. Oh, wait.
Like you can put the maximum, like how much you have to invest, like to start.
Oh, yeah. There you go, folks. Okay, cool. So,
So then if you diversify, you have IRAs.
Oh, see, I understand. Thank you, sir. What is it?
Those are just like little stress balls.
I think it's misplaced.
I think this, you're welcome. Good luck with everything.
I understand this,
Did you guys have any questions or?
yeah.
Oh, yeah, she's retired.
I'm trying to find it.
Maybe. She did. She did? Oh, okay, I gotcha.
Yeah, I mean, how old are you? Oh, you're 16. Okay, so you're young. So you have time, and you know, like there's even people. Are you on Instagram? Yeah, there's people, even young people on Instagram that talk about finances and the importance of saving and stuff like that. Like, what do you want to do when you get out of school?
Thanks, sir. We'll work on it.
Mm-hmm.
I want to graduate and be a doctor.
Oh, that'll be good. We definitely need more people to be doctors because there's not enough people now that want to do that anymore. So that's good. So, yeah, you can do it. You just have to, you know, just keep up with your studies and you can do anything, you know, you put your mind to it.
Yeah.
Yeah. So this, if you want to take a notebook and you can start, you know, your journaling, your plans or whatever you want to use it for. And this is just like a little cell phone holder. And then there's pens. You can take pens and what's your name?
Jacqueline.
Jacqueline? Oh, okay. Jacqueline. Okay. Nice to meet you,
Do you
Jacqueline.
work here?
No, I'm just friends with well, my godmother is Hugo's nephew. My godmother, he's my godmother's nephew, and he just asked me to come talk because he knew that I used to work here for Tuber Price, and he just asked me to come and talk to people. And sometimes I like to talk. I don't really like to stand up in front of people. I get nervous, but it's just important to share the information, I think, with young people. I don't have any children, and like, it's just important to plan for the future because sometimes people are very short-sighted and they're just thinking about like right now, but you know, there's your whole life ahead, you know, that you have to plan for and have a lot of decisions to make. And do you go to school here? Okay, yeah. Do you know Miss LeBlanc?
I think I see her.
Yeah, she's like my really good friend. We're supposed to go to Bruno Mars concert on Sunday. I told her I would take her for her birthday. But yeah, I didn't even know that this was the school where she teaches. But I think she's supposed to think she was on like a leave of absence or something, but I think she's coming back here. But she's a really good friend of mine. But
Thank you.
you're welcome. It's nice to meet you, Jacqueline.
Thank you.
Then so we can get them.
Oh, yes, sir. So that's the plan. So the internet is really bad right now.
Awesome. They just changed that. That used to be a special public school in the county, but I believe I heard they're no longer doing a special program in Roswell. It's now going to become a general high school like the others. And so she got in just in the nick of time. Yeah. Yeah. So there's two ways it works. Once they graduate, anybody that wants to go to Prince George's Community College first, they can go to Prince George's Community College for 2 years, and all they have to do is pay fees, scholarship. Basically, everything is free, maybe like $100, $200 fee per semester. So that's an easy way. But they can actually start while they're here, so that when they graduate, they already have that 2-year degree. So now they only have to go to general undergraduate school for 2 years. Yeah. So it's called a dual enrollment. Yeah.
I was told that.
I try to tell the kids when I see them in the 10th grade, hey, go do this. All right. Get involved, get enrolled in the dual enrollment program. And I have about 5% of the kids that go because they're like, I don't want to go to school. I want to do what I need to do here and get out. But then those that are really serious, okay, I'll do that. And so while they're taking classes here in the 10th grade, 11th grade, well, it starts in 11th grade, so 11th grade and 12th grade, they're also taking classes at Prince George's Community College. So when they graduate in May or June of the year that they're supposed to graduate, they'll tell them, hey, not only do they have a degree from High Point High School, but they also have a degree from Prince George's Community College. All right, and then when they start their next education plan, they'll be a junior. So that's only 2 years of college that you have to pay for, unless they want to go to grad school. There's also other scholarships that are available. I don't know if you heard me telling the gentleman over there. We've had people that have applied for and received $100,000 to $200,000 worth of scholarships. All right, we had one young lady last year that earned $300,000 to go to one of the Ivy League schools up in the Northeast. I know someone not from this school, but I know someone who earned a $400,000 scholarship, okay, to go to any Ivy League school she wanted to for all 4 years. That might not even be enough because that's how expensive college is. That's why I say to the kids, if you have a chance to go to school for free, go and have one. Go while you're in the 10th grade, just take an extra course. Do that dual enrollment program. And then suppose they still get that $400,000 scholarship. Now they can use it to graduate school. In the class that I teach with Dave Ramsey, there is one of their hosts. When she was a 10th grader, her mother came up to her and said, look, your dad just died. I'm going to be honest with you, I don't have enough money. So if you want to go to college, you're going to need to start working and get scholarships. So she listened to her mom, and she did it. And she applied in her senior year I don't know how many, but she received over $100,000 worth of scholarships. She applied to at least 100 scholarships. What she did, she made out a plan. She did 4 days a week. All right. What the students can do that they don't understand sometimes is they can take one essay and make it work for all of the colleges that they want to apply for. And so that's what she did. And so when she finished, it paid for her undergraduate school and it paid for her master's degree. She didn't pay a dime at all. All right. And it worked so well for her that Dave Ramsey said, hey, I want to get you to come in here and work for me. So she works in his office in Tennessee now.
Oh, cool.
So, yeah.
So can they see you, or how should they get in contact?
They can see me if they haven't taken financial literacy yet. You know, you can ask if they want to take it with me. I'm not always guaranteed to Ramsey, but we talk about these things. And all of the financial literacy teachers do. So even if they get one of the other 3 teachers, they're going to do the same thing. We're going to talk about ways how you can save money, talk about ways how you can invest money, how to start a budget at a young age. And what they're supposed to do is bring that home, because some of us, as parents, we don't always have a budget either. So they'll bring it and talk to you about how you start the budget and how you can begin to save money as a family. You have any questions? Are you one of the students or?
Yeah, these,
Okay.
this right here is a home.
All right. Did you guys have any questions for me, students? This school is so big.
Yeah.
Yeah. You don't see everybody, and I'm on the 3rd floor. So if most of their classes on the 1st or 2nd floor, I don't even see them. But I recognize one of your faces. I just don't know who you are.
Okay, so he's supposed to graduate. Is there a time frame that you have to apply to the colleges or stuff like that? Or you should have already done that?
You normally start in September, October of your senior year. All right, if you want to go directly, but it doesn't stop there. You can still do it at any time. But generally what we do, we have a system here, Peer Forward and some of the other groups that are here on campus will say, hey, we're going to have a financial assistance day where you come in and we talk about the FAFSA, how you can sign up for the FAFSA, see how much financial aid you receive. And that's one thing that I didn't talk about yet that I want to say something to you guys when you're here. Everybody should fill out a FAFSA form in November or December of their senior year. Once you fill out the FAFSA form, it may take 1 or 2 months, but it'll come back and they'll say you qualify for this amount of money. If they say you qualify for a loan, try to avoid it. If they say a grant, that's something that they don't have to pay back. If they get scholarships, they don't have to pay back. All right, maybe they get work study where they can go. When I was in college, I was able to receive money for work, for working at the college. And so my freshman year, I went in, I talked with someone in the department. He told me what he wanted me to do. He wanted me to start an information center. So as an 18-year-old, I went to Stevens Hall at Towson University and I started an information center. I got literature from the admissions office, the financial aid office, and other places. And when people would come in to Towson off of York Road, they would think that that was the administration. So they would come in and ask for information, and I said, it used to be the administration, but they moved it on the other side of campus. But here's some brochures, you can go talk to them. And so I earned money for doing that. They paid me, I think it was like $10 an hour to do that my freshman year. But guess what? That job led to another job. That summer, my bosses liked what I did, so they asked me, hey, would you come and work in the orientation office? So all summer when the new freshmen came in, the next summer, I was working and making more money. All right, and it eventually led to me getting offered a job at the college when I graduated. And so that's how I got into education. I was a business major, but I got into education because I liked it and I started doing it in college. And then my 4th grade teacher called me up and said, hey, you can go to Johns Hopkins for free, become a teacher and get a master's degree from Johns Hopkins. So I did it. So both my master's degree, I never paid anything at all because my parents saved money for me and I earned scholarships when I was at Towson. When I graduated, I owed no bills. And that's where a lot of kids get in trouble. They go to school, but they go on loans. And so when they finish, they owe $50,000, $100,000. And what they don't know is if you don't pay those loans back before you graduate, the interest is really high. So that's why I try to tell students, start now, start in the 10th grade, earn scholarships, put money aside, pay your college off in cash if possible, so that once you do get your real job, you're not worrying about paying $1,000 a month back in loans. You're just paying, you get to keep your money so that you can build investments and begin to look at buying a house and doing something else.
So it's only like in the year and then the FAFSA you were talking about, only then you can apply for it. Like now it's too late because now he has decided, well, now they've decided he will graduate. So everything is basically a rush. And mind you, we don't really have a lot of information about a whole lot of stuff because we are basically new here. So that's why I wanted to come to know what are our options.
It's not too late. You can still apply for FAFSA. It's not going to be as plentiful as it might have been if you would apply back in December or November. But you can still apply for FAFSA. Do it as soon as possible. Go home and start on it tonight. It may take a week or two. They'll need information from you as a parent also. For your 10th grader, he can start applying for scholarships now. He can start applying for scholarships now. You can, many places allow you to get scholarships from any grade, and you hold on to them until you graduate. That lady I was telling you about that works for Ramsey, that's what she did. She started in her 11th grade year, and she kept getting scholarships. Some of them were small. See, some people see it's only a $200 scholarship. That's not worth it. But if you get 5 $200 scholarships, that's $1,000.
Correct.
And Google what scholarships are available. They have scholarships for people who are left-handed. All you gotta do is be left-handed, and you get a scholarship if you apply for it. All right, if you work for Chick-fil-A, I was listening to this on the way into school this morning or yesterday morning. They awarded $20 million of scholarship money to people who work for Chick-fil-A. All right, so companies will do things like that. Safeway will do things. Giant will
Even
do
Ride
things.
Out too.
Yep, so you have to do your research and just research who you can apply for and then apply for it. The worst thing that can happen is you don't get any money, but if you apply for it, you might get money. So if you apply to 100 places and you get 7 scholarships, that's enough money to help make a dent where you go to school. All right, and then remember, if you don't get scholarship, go to First Georgia's Community College for free for your first 2 years. All right. One thing I used to do before I came here, I used to be a college coach. So I coached girls softball. So a lot of my players that I recruit the last few years before I decided to stop doing that is they would come already as a junior because they did the dual enrollment programs that they had in the different school systems across Maryland and other states. So when they came in, they were already a junior. So some of them wanted to stay for 4 years, but they got scholarship money then for their graduate school because they had already had 2 years undergraduate. They played their sport for 4 years. All right, they played softball. The last 2 years, they were earning a master's degree. And part of it was scholarship by softball, or if you play another sport, basketball, wrestling, whatever.
It's good to get into sports. Sports is very helpful when it comes to getting
It can be
scholarships.
if you excel at it, you know.
Yeah.
A lot of people play basketball, but only the top 10% might get a scholarship. All right, the
Yeah,
top.
because my daughter used to play volleyball.
I think I told y'all before I came here, I did middle school. So my last group of middle school students are graduating. Well, they're 11th and 12th graders, my last 2 weeks. So several of my students that graduated this year have earned either athletic or academic scholarships. And one of them, parents just sent me an invite this week saying, hey, we're having a graduation party for her and come up and have fun. And she told me that she had earned some scholarships to go to an out-of-state school. Right. She turned down scholarships because she didn't want to play basketball. She wants to be a doctor, so she wanted to concentrate on med school. All right, so she turned those down, but she held on to the academic. Her sister, who I also had graduated last year, same thing. She's following her sister's step and going to a school in New Jersey. So there's several ways that you can do this, and you can get funding so that when you graduate college, you don't owe all this money. Yeah. Come talk to me and I'll help you. Yeah. Same thing. I'm just saying, since he's in 10th grade, he'll be around, at least for another year or two. So.
Thank you so much.
So you say, let me check in anything out.
No, with like when you're free to do a Zoom meeting.
After, right now where I'm at, the school that I'm at, they don't, they're late school, so after 6 would be fine.
Okay, like next week, like
Next week?
maybe like Monday, Tuesday, or Wednesday, I have evening hours.
Okay.
So we could do 6 o'clock on a Monday, Tuesday, or Wednesday.
Wednesday be fine.
Wednesday?
Yeah, Wednesday.
Okay. Do you have, what's your email address?
Okay, my personal email is my last name Hayes, Hayes, Gary is my middle name, which is Garry, 06.
Él está en el programa del Estado.
I call him.
I could see something. Yeah, no problem. Thank you.
Fidelity or Vanguard or Charles Schwab, but the important thing is to just set it up somewhere and like how much you can start any amount you want. I know they have specific accounts that I think they used to be like the parents or grandparents could contribute like $10,000 a year or something. Like that. Yeah.
Cool. Thanks, Ronaldo. We'll keep working on this.
And then she'll definitely be a millionaire. Yeah.
What is small you can give me?
Yeah, I think usually the smallest amount is like $25 or
Every month?
Yeah.
Where's the offices in the area?
No, they have offices in Baltimore and Owings Mills. Yeah. So that's the information. That's like all the information is on there.
So you can call them.
Yeah.
Tell you need to open one account for them. But every month to give it $25.
Yeah, you can set up like an automatic transfer from your like checking account if you want to do it like that, or if you have payroll deduction, you can have it set up like that. Or
Sandwiches? Yeah, I saw some over there. Did you get one?
Financial literacy. Yeah, you just scroll on the different categories. Just scroll on the different categories, workbook, and just see what the information is.
Call them to they can give you more information.
They can give you more information. See, I don't even work here anymore. I just used to work there. But my godmother is Hugo's. He's her nephew.
I just need one thing.
He went to the funeral.
Yeah, sure.
So, and I wrote
2 días de ensayo de graduación, o 3, o si 4 porque también ahí. ¿Cuál García?
See if it connects you back to
Yo la vi. Yo con miedo que me iba a ver en el carro a regañarme. Porque ahí estaba yo sentado en el carro a la 1:50.
I couldn't get it down, because I was trying to do it in the but if I want to take off, I can't, you know.
Tú me dijiste que that's why 600. Porque es más pequeño, es más pequeño.
I set up the individual retirement account, and I put in.
Where?
In T. Rowe Price at
Oh,
this
this
company, yeah, and I put it in the mutual fund, the Blue Chip Growth Mutual Fund, and when I look in my account today, I have 157,000 sitting there, and I didn't do anything. I didn't add to it, I didn't take from it, I just sit there, because you can't take out of the IRA until you're 59 and a half without penalties. So I didn't need to, I didn't need the money because I had a job.
Yeah, wait.
IRA, individual retirement account. IRA, individual retirement account. Are you all together? Oh, okay, I wasn't sure, because, what's your name? Vera, nice to meet you, Vera. Yeah, IRA. IRA. Individual retirement account. IRA. Individual retirement account. Yeah, and then you'll be that lady. What's your name? Sarah. And what do you want to be when you grow up? Do you know yet? An actor. Ooh.
I told those kids, who came from Africa, we they tell us go do science, go do this, go do that. But they have all the opportunities here. They can do whatever they want to do.
Yeah, you can do whatever you want to do. Put your mind to it. But when
you start acting here?
Yeah. When you start acting, just make sure you take a little piece of the money that you earn every time you earn it and put it into your investment for your retirement, because you'll be old someday like me. You're very young now, but you will be old. Trust me.
Thank you. Have a blessed evening.
Thank you, you too.
What time they finish?
I think this is here until 7.
Yeah.
Oh, it's already, or no, 7:30. I think it was 6 to 7:30. So it's 6:20 now.
Okay.
Yeah.
6:20 in the 7.
I mean 7:20. 7:20. Yeah, so 10 more minutes.
Thank you.
I see your Loyola shirt. Is that Loyola High School? College? University? I went to Loyola.
Yeah, I was gonna ask you because you went to school in Baltimore. And I was like, wait, is you Loyola's house in Florida?
I did. I went to Loyola. It used to be called
Loyola College.
Yeah. And now it's Loyola University. But yeah, that's where I went for 4 years. That was status. Yeah, that's where I went. I started in 1988. I graduated in 1992. Oh, really? Nice. Nice. Are you going to stay on campus? Okay. Yeah. Yeah, that's smart. My grandparents, they asked me if I wanted to stay on campus.
Araceli,
I stayed on campus.
venga.
Even though I lived in Houston, I lived close, but they just wanted me to have it.
No, my plan is commuting my first year, becoming RA. Because with scholarship and grants, I'm going for free, plus a refund, but that's no problem. So I'd rather get that, and then next year I become RA.
¿Qué son estos? ¿Oradores o qué?
I start planning on.
It's been so long, I've been out of school that I couldn't remember if that was the, symbol for the college or the high school. But the high school is a little bit but it's like a full college. Yeah, that's where I went. So, yeah. And then after I graduated, that's when I started working for Price. Yeah, I haven't really been back.
Right, so you can fail a whole year, get here, and then just to get a
So come over and get,
What I want, I wish I was in, you said the stock market. I lost a lot of money like why should I do that?
why? Oh, well, see, first of all, it's not my company.
Well, you don't represent.
Yeah, I used to work there, and I have a friend who, she was actually supposed to come in to the table, but she couldn't make it, so she just gave me the stuff. But, I mean, they've been around for like over 85 years, so they're not some, fly-by-night, upstart. And I have millions of dollars there right now, so, I trust them.
Let me sit right before they go. Hold on a second.
Yeah.
I want to get one of these books.
Uh-huh. Yeah. Thank you so much. You're welcome. Thank you.
I like these little notebooks.
Yeah, sometimes.
Yeah.
And yeah, you do. I think they're the like straw caps for those like Stanley mugs or something.
Oh, okay.
I don't even know. My friend gave me these things.
So you were saying.
But yeah, you do have to for sure be careful about some of these fly-by-night companies and things. And how is it that you had a 403B?
I have it with the gentleman that was up before you.
Oh, you do. It's a
with National Group.
It's a
it's a which phone holder?
Like a phone holder.
Yeah.
Okay. Yeah, you have to. You have to be careful about the fly-by-night companies because
I was impressed.
There's a lot of investment scams.
I was impressed with I was telling the other gentleman, National. I'm with them, but not with him. My account is not with him, but it's with a national group like it. And one of the things that.
Excuse me, is this one? No? Because I've taken my phone, it says no internet.
Student sign-in. No, that wasn't mine. I don't know what that one is. But this one is mine. Yeah. For T. Rowe Price. Did you scan this one?
I scanned it to say I can take it. Oh yeah, this one.
Mm-hmm.
What frightens me the most is when you save money with a company, specifically at the 403B. Now this is a loan. You just take it out, you just get hit
penalties. Because people always want to dip into it, so they have to incentivize people to not keep trying to dip into it.
I didn't.
Because the whole purpose is to have it for your retirement. Not to be dipping in because you want to go to Vegas or whatever. Like, you leave it in there and you leave it until you're 59 and a half, and then you can get it without the penalties.
They charge me, they hit me hard. I'm 71 years old.
Well, then you're eligible to take it. So
they took it, but I just took it this year. And I took
I
it.
thought you were under 50.
No,
Okay.
I took it, I took it because.
Oh, they took the taxes.
Yes, that's what.
Yeah, yeah, so it's not penalties,
Well,
it's
yeah, but it
taxes,
was-
but you,
it's
it was a,
gangster.
right, but they're gonna get their taxes.
I got it.
They're either gonna get it on the front end or the back end,
I
and so.
prefer they, to be honest with you, I prefer to went to finance because.
Yeah, of course, now, but when you did it on,
I didn't know it.
exactly, and when you did it before, they said, oh, you'll be in a lower tax bracket
Oh,
when
yeah.
you
Oh, yeah,
retire.
that's nonsense.
So go ahead,
Okay.
it's tax deferred now, and then when you retire, you'll be in a lower tax bracket, and, they tell you all that stuff. But they're gonna get their money one way or the other.
With
T. Rowe Price.
Price. What is the minimum that you have to invest?
It depends on which mutual fund you're going to invest in, because certain ones might require you 10,000 minimum, but certain ones might just be like 100. I think it just depends.
Right?
Yeah,
Okay.
and you would have to call and you go online. You can look at the prospectus or whatever,
Okay.
find the information about it to see what the minimum investment is. But like I said, it depends on which fund you choose, because
Okay.
some of them have a higher limit than the others. Just
Okay.
depends.
Okay.
So, like if you're gonna invest in like a money market, it might be $25 minimum.
Right.
But your return, your interest is only going to be 3% or whatever. Whereas if you invest in one of the other blue chip growth fund or some other mutual fund, they may have a higher minimum limit, like $1,000 or I don't know what they are. I'm not an advisor. I don't even work there anymore. I don't. My godmother is the aunt of Hugo, and we went to a funeral together a couple weeks ago, and I rode down with them. It was in Virginia, and we were just talking, and then he said he was having this and asked me to come out, and but you see, you're at the point now where is it the RMDs, the required minimum distributions? Is that where you are now?
Yes.
Where they're requiring you to take it?
No, not
Okay, or is that 72 or 73? I know for me it's 75.
I took it out because I had my mother left my brother and I home. And actually it was all four of us. It was four of us, and two of us are alive, and the other brother, and the oldest brother, the youngest and the youngest are deceased. And the house needed some
repairs,
repairs, and I decided to take the money out of it. And I haven't actually spent all of it. I took about 45,000, so I'm down to about 30 something now. And there's some renovations to the house that I'm definitely going to do because I'm trying to make it out of a then
I have rental property.
I decided that when I get it functioning, I'm going to go through the
because the internet is not agreeing.
I've done through a rental property manager, and I don't like it because nobody's gonna take care of your stuff like you're gonna take care of it, and I just don't like. I didn't have a good experience.
Oh, okay, because
so I just manage it myself.
Well,
and I have a good tenant, luckily.
That's
the important thing is to get a good tenant. Don't let anybody come in there with bad credit. I don't care what they tell you.
Let me ask you something first. How did were you able to?
You can run their credit.
You can do that? Mm-hmm. Really?
Yeah.
Because I really didn't want to go that route, but
he's already kept.
Yeah, I don't care what they tell you. I don't care what stuff. Sad story. Because you got those, and then.
Okay, bye.
All right, thank you, sir. Let's keep it the good work. All right, thank you, man. Let's keep it up.
Get their approval by, we have them fill out an application and we charge them for an application. You know, I think my property is in Baltimore County. I haven't done it for like 2 years because my tenant, this is like his 10th year there. And I've been renting this house since 2004.
Okay, cool. So it looks like everybody left already. Cool, we'll work on it. All right, great. So thank you, Ms. Jackson, helping put all this together. Ms. Harville, sorry you couldn't make it, but we'll work on it. And thank you, Mr. Trent. And Ms. Who else we got? So, wait. Trent Cunningham. Oh, okay, yeah. So thank you, Mr. Trent. Appreciate your support, and thank you, Ms. Cooper. Appreciate your support, and remember, everyone here is really helpful. So backups available. We'll help you out. And if you got any questions, check with the teachers or or our guests or other staff at the school around. We'll figure it out. So we'll see you folks in the next one. Okay, thanks, bye. And then